All right. Good evening, everybody. Hello, hello. Good afternoon. Good morning to you guys in Japan. Wherever in the world you're watching from, tuning in from, let us know in the comments. We'll give you a shout out. It's been a while since we've gone live. Mr. Climb, are you around, buddy?
Yes, I am here and ready.
How are you feeling today?
Pretty good. I think
Yeah?
better than a lot of people. Yeah.
Yeah, we'll
Can't
talk
complain.
about that too. Hey, we got a lot of people. Okay, so Taiwan, people from Taiwan in here. I think I saw Josh somewhere in the comments, Mr. Josh Mandel, is that right? He's talking about like fourth tranching. This is episode number 4. It's been a while since the last episode. Number 3 was the last one. I think it was about like 5 weeks ago. I'm joking, not joking. Always with the dad jokes. But yeah, we're long overdue. We actually were waiting for a lot of things to happen so we can have more material. And we decided with Climb, it was probably about time we went on air. So we have a lot of things to go through today. Set aside an hour, hour and 30 minutes. It's Saturday evening here in the States. For those of you who wanted to Netflix and chill, sorry to rain on your parade. You're gonna dojo and chill because that's what Bitcoiners do on the weekends, right? All right. All right. Quick things. We have Voyager on the moderation on the overlays here. Voyager, if you see this, if you hear this, give us a sign. We got Mr. Bork on the chat, keeping an eye keeping an eye on the tranche shares. We have a lot of tranche things to talk about today, and yeah, I'm excited. Let's go. Climb, you ready?
I'm ready.
All right, let me peek in the chat and see some of the. Holy crap! There's a lot of comments in there. Whoa, 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 whoa! Florida, Germany. That's like 3 a.m. over there, man. Guten Tag, gute Nacht, gute Nacht, mein Freund. From Switzerland, ouais, salut, salut, ça va? Houston, howdy. Canada, hello, eh? Toronto, same. Quebec, ah, bah, bonjour, ça va, les amis? Australia, well, hello, mate, crikey. I don't know. I was just like, nobody from Japan? It's like 10 a.m. over there, man. Where's Jake? All right, good. Let's go. Let's move on. We got a lot of things to cover today. Okay. Where is my camera? Okay. This is 4th episode again, 4th tranching. Welcome. And let's get the boring things out of the way. Financial standard disclaimers. This is not financial advice. Nothing you hear on this Discord is financial advice. This is all financial entertainment. So let's have some fun. We receive no compensation from Metaplanet. Nobody asked us to make this podcast. We just decided with Klein with a few other people to work on it and share all the things that we talk about on the Discord. We do hold Metaplanet shares personally. I think that's been pretty clear. Okay, boring stuff out of the way. Today's agenda, there's a lot of stuff. Okay, we're going to go through some community updates. We'll go through the 555 plan update, current progress. We'll go through the balance sheet, short interest, see who's been tranching around and who's not tranching. We'll talk about the US subsidiary and news regarding that. We'll talk about Q2 income, which, by the way, I think I think we're getting earnings in a couple of weeks, right? Q2.
That's right.
Yeah.
I think it's either like August 13th or 14th. I can't remember.
Yeah, we'll be around for that. We'll talk about the PFIC thing in passing, and the shareholder meeting, the agenda of the shareholder meeting, the 3 proposals that are on the agenda. Preferred shares, I think everybody's pretty much aware of that, but we'll obviously dig into that. Probably it'll be the meat and potatoes of this presentation, and then we'll talk about speed running and charts. We love charts, right? Okay. Actually, this goes kind of with the next slide, but always want to acknowledge all the good content creators, the visuals and the audio creators of this space. Chris Houston on the top right here has been putting out some fire memes. I think there's one where we're like, it's time to tranche or something. If you want to show that one, Voyager, Flash Graph, Shiraku 2, Mike, yeah, this one. This one's so funny. I don't know why. Yeah, it's time to tranche. Christoph too. Christoph's been stepping it up. I think some of these, all of you here on this slide and others making content should basically, here, I'll come back to this slide. Take part in the Metaplanet games that Jerry has been talking about. So, apparently there's going to be 21 winners, and it's a competition of who can create the best, most memorable memes and visual art related to Metaplanet. And so, I think within the dojo, there's already a lot of people, and I think on the Japan sites, there's quite a few good creators too. Flashgraph, I think, won the Bitcoin or Bitcoin Magazine, I forgot, for the meme competition a couple weeks ago. So yeah, that's the Metaplanet games. Also enter. Go ahead and enter. You go back a couple slides. Next update. So Dojo X is growing. I think we passed the 2.5 thousand, 2.2500 members recently. So we just happy to hang out here. If you want to join, just scan the QR code below, and you will be transported into the Dojo X dimension. There you go. Somebody probably scanned it. Acknowledgement to Mr. Nicholas. I think it's Coolio. He's been doing a daily update on the market cap of Metaplanet and where they're standing on the TSE. And recently, he actually started doing the same rankings before the hotel side. So right now, I think as of the last update, we were between Lyman and Choice hotels. Pretty interesting, right? So let's see who we can when Metaplanet can rise up to be the top one hotel by market cap, how fast we can get there.
Yeah, that's cool.
Yeah, that's cool, right?
Super cool.
Yeah. Okay. All right. 555 plan update. Climb. What do you have to say about this?
Yeah, this is, I think a lot of people don't really realize that, because you hear a lot of people say, oh, the flywheel stops when price is down, when mNAV is down, and that's not the case. If you look at a rough percentage, just looking at the month of July from the disclosure, a lot of the stuff from today's slides are from recent disclosures, by the way, and of course from like Metaplanet personnel's X posts and things like that. But you can see here in the shares column, the second column there, that's the number of shares that were, or the number of moving strike warrants that were exercised that day. Most likely those shares were sold, that day or maybe before, but around that time by Evo, and then replaced with the exercise shares. But yeah, you can see that, like even last week, they sold 2 million shares, not very many, but they sold 2 million on Monday. They sold 3 million on on Thursday. And, then you look at like early May, price was up pretty continually for, the first half of May at least. And they were able to sell just, pretty much every day into that heavy volume. So there's different speeds that they go, with the dilution. And I think as a shareholder, what I would like to see is what they're doing. And that is being more aggressive into strength, less aggressive into weakness. But you don't want them to full stop into weakness, unless it's just mNAV is way too low or something. But at 2.5, at 3, at 3.5 mNAV, accretive evolution is very strong. In the ones, I really don't like it. In the ones, it gets a lot more frictiony if you kind of run the numbers for it. Obviously, 4 is better than 3, 5 is better than 4, but it's sort of asymptotic anyway. Beyond that, in some ways, but yeah, so they're still going, and we'll see some other charts shared today that will show. People might laugh or critique at me or Vince or others saying zoom out, but like really look at the charts and get your own conviction. Be willing to learn new perspective from maybe things that I say, things that Vince says, things that other people say. What clicks with you, incorporate that into your understanding of how all this works. Not everything I say is 100% correct. I'm learning with everybody else. Vince is learning with everybody else. So yeah, let's get to what's next.
Yeah, thanks, folks. Thanks for the reminder. Yeah, we obviously, like we're looking at this chart here. This is like a daily chart from the recent price action, and we've obviously, gone down like from 1900 yen up down to like close to like 1,000 yen, right? We made like break below that, but the reason why I wanted to show this chart is all these yellow arrows are the exercise dates by Evo, and the blue numbers are just millions of shares that they exercised. So I actually wanted to switch the arrows around because I used to have down arrows, and then people think that, well, that's shorting, but those are exercises, so they're actually diluting. They may have shorted before those yellow arrows, there's also another possibility is that they could be just plainly exercising the shares ahead of time and then like selling them like at a later time too. That's not something that's out of question. Like we don't know exactly how they're operating. All we can do is like look at the well, Bloomberg, if we have one, the Bloomberg terminal, and also look at the shorts positions that we'll go through in a little bit to see what Evo might be doing behind the scenes. But there's ways to stay obfuscated from the reporting requirements, right? Right, Klein?
Yes, that's right.
Yeah. So yeah, so this chart, like obviously we had a huge run up in May, June, stalled a little bit, and now with Bitcoin retracing, like it looks like we're coming down. But if you add up all these blue numbers here, it's still 30, I think it's about 30 million shares exercised in July, which is a fraction of what was done in June and May. In May alone, like we had 110 million shares in like just like 10 trading days, right? So they're still diluting, they're still moving along a little bit. Yes, it's a bit slower, but there's it's still accretive. As long as you do it above mNAV of 1, I think everybody understands that, but they're going to be a bit more careful doing that, right?
Definitely.
Okay. In terms of progress on the 5/5 plan, so I pulled up my Figma tool and I went ahead and designed the little tracker. And I probably will be sharing this on X more often too. And you can see that in terms of the tranche 21 and tranche 22 of the special acquisition rights, like we haven't started using those. And those, as a reminder, I probably should have put them on there. Is like are sold at exercised at a 1% and 2% premium compared to tranche number 20 that we're currently on. So, we're about halfway through tranche 20, 90.5 million shares exercised so far out of 185 million. And we are about 16% through the whole 5/5 plan. So, I think this would be a good little uh, graphic to keep around and keep updated. So we will see that. But we're moving along. And we have to get through this 5/5 plan in order to reach the guidance goal of 210K BTC by the end of 2027. So this is one of many plans. Do you have anything to say to this? Go ahead.
Yeah. Just one quick thing is, the 555 plan. I think. Do you remember? I think it's a 2-year. Like technically, like by the disclosure, it's a 2-year plan. But I mean, as soon as they released it, they said that their expectation was something like 6 to 10 months, and that's what I would expect as well. So,
Yeah.
if you look at it from being released, let's just call it mid-June, and then 6 months being the end of the year. Somewhere between there and Q1, I would expect this plan to wrap up. It leans on the market, it leans on other things happening, and Bitcoin price being exciting helps quite a bit. I think we haven't seen that recently, but I think we will. So there's different speeds that things go at, but yeah, right now we're about a sixth of the way through, and a little bit, a month or a little bit more than a month through. So that that would pull out to, let's say, 6 to 8 months. But yeah, the 6 to 10 month estimation for completion, I think, is still pretty on point.
Yeah. Yeah. Yeah, I mean, so obviously, yeah, the 5/5 plan. Thanks for the correction. Is a 2-year plan, but there's or guide it looks, but the looks of it will be done before the 2 years, and so at the worst, it is a 2-year plan, right?
Yeah, that's right.
Yeah. All right, let's move on to the next slides. Go ahead, man. This one.
Okay, yeah. So here's another thing, just talking about price action. And I went a little bit before because some people were wanted to see before. What I've shared before was like February or mid-February to present. And then here I went back to October. Before that, it gets a little bit messy. And I have that data and I can show those charts, on X or something if people want it. But they get a little bit messy, and the reason is because of the way that the rights issues were timed with the Bitcoin acquisitions. It's just a little bit more choppy. It's not like good or bad. It's just sort of awkward looking. And then things got more fine-tuned later last year, and then things got really fine-tuned in February of this year when they started with the 210 million plan. So that's the cleanest data, and that's why I was going from February before. It was just kind of the smoothest execution that they had come up with so far. And so, yeah, if you look at this is similar to what I've shared before. The 3, 5, and 7 mNAV calculated prices are the white, green, and blue lines and their trajectories. And then you see the orange dotted line is the stock price. And so you can see it kind of, going between 5 and 7. I think it kind of peaked at 10 in February. Then it dropped down to like 2.5. That's when we started the dojo, when things like that started happening. And then we went up to 7 or 8 mNAV, I think, in mid-June, I guess, almost a month and a half ago now. And
Yeah,
then now we're
mid-June.
back down, around, okay. And then now we're
Yeah.
at 2.6 or something like that. So, what I'm saying is normal price action, especially after such a huge move up. And certainly a lot of other, Smarter Web and other companies have also compressed 50, 60, 70%. And I have not done analysis on charts on those guys. But anyway, this is a normal range. And, I have my money where I think things are going. And we'll just see how things play out.
To add to your point, there's a few OGs in the Discord. Like I'm thinking about Jake and Plan M, and these, and I think probably Franz also. But these people have been in Metaplanet since April 2024. Since the announcement of the BTC Treasury strategy, and they've we were talking about this the other day because the sentiments is all over the place, and some people are panicking, some people are doom posting, but Plan M, Jake, yeah, man, we see the same thing every time. Like we get into stock and then it rockets up, 100, 200%, and then we'll get like a 70% correction, 80% correction, and then it repeats, and then it repeats, and then it repeats, and every time they see people going through the same roller coaster, emotional roller coaster, like leaving the trade, or FOMOing at the top, leaving the trade. Yeah, why is it going down? But it comes with it. Like, I think it bears to repeat that you were talking about a 300% implied vol asset. Like it's gonna do these things. Just like when all of you in the audience buy Bitcoin, and Bitcoin goes through 2022 went through like a 75% drawdown. And what do? Just have to hold, right? And so I think a lot of us also who came over from MicroStrategy, strategy trade, in November, kind of got our nuts forged with diamonds after taking that brutal tip top at 545 and coming down to 250 back in February, right? So and if you were leveraged up on options, you go vaporized. That was pretty rough. And I know you and I, Klein, we both held long call options on strategy. So yeah, stuff was pretty brutal. But I think if you don't have any time risk on a stock like this, Metaplanet, there's no real reason to really panic. You look at the company, is the company still executing? Is management doing what they're saying they're going to do? Then the thesis doesn't change. Right.
Yeah, for me, it boils down to bet sizing and conviction.
Yeah.
So, even if I'm maxed out on conviction with something, which, it's hard for me to get more bullish on Metaplanet. And I've made that case since late April. And as things sort of made more sense to me, it's not like I got it all in late April and jumped in because I got everything right away. I actually bought, it's a funny story, but I bought an equivalent amount of Semler. And, looking at Semler now, I think when I did that, Metaplanet was like $2.50. Semler was $36. Today, Semler is like $36. And Metaplanet's like seven and change, right? And it is hard to see. But one thing that I learned years ago was that as long as I manage my bet sizing and my conviction, then when I experience the drawdowns, they still hurt. It's not like you have a shield and they don't hurt anymore. You might get a little bit numb to them, but as long as you have bet sizing properly, based on your conviction, then you can weather the storm. And the only way that you keep a seat at the table is if you weather the storm. And so that's the most important thing to me, is staying in. I try to make sure that, I'm not blind, and that my conviction isn't just like rigid. Somebody, I can't remember who, but I saw it on X a few minutes ago, that somebody posted something from some quote from uh, Druckenmiller, and he was saying something about being very nimble, like being able to admit he's wrong, and change on a dime if the facts present themselves that way, right? And I mean, people have seen me do that to some extent with MicroStrategy. I won't say that I'm bearish on MicroStrategy by any means. I'm very bullish on them. I think they'll outperform Bitcoin. I think they deserve a higher mNAV than they currently have. It just so happens that I'm much more bullish on Metaplanet. So people might confuse that a little bit, but just like I've said before, strategy investors are bullish on Bitcoin, and I think most Metaplanet investors are bullish on strategy. It's just, people might call it further out on the risk curve. I don't necessarily feel like that's the case, but you can think of it that way if it helps. And like another thing from this chart is the net asset value per share. Since October, over like the last 300 days, has been doubling every 64 days. That's calendar days. So, basically every 2 months. So the 1 mNAV relative price doubling every 64 days, the 2 mNAV, 3 mNAV, any multiple you want has been doubling every 64 days. And I've certainly seen that continue as long as I've been an investor, and I don't expect it to stop. It'll slow down at some point, but it's not going to stop anytime soon, I don't think.
Yeah. I think the important thing I want to point out on this chart that we talked about in private earlier was the orange dotted line, the stock. If you look around February, like mid-February, the stock price was like trending downwards as the mNAV prices are still rising. So basically, because they keep executing and adding Bitcoin to the balance sheet in a creative way, it just those two lines eventually met, and kind of provided like an on ramp for the next leg up.
Yeah, exactly. And yeah, one last thing, even let's see, like early April to kind of early May, there around that time frame, when the orange was hugging the white, when we were kind of trading around the 3 mNAV point, even under it, the white line was still moving upward, right? And I mean, that's because of accretive dilution. They certainly sold into strength that happened in early May a lot heavier, at higher, as the multiples went higher. Essentially, it's not perfectly like that, but you can think of it like that. But yeah, that's the whole goal, is for the net asset value per share to keep rising and all the multiples with it. And then it's just a question of what multiple we'll be trading at. And really, you can even extend that to think about what your own, personal holding time frame is, what your expectations are for the stock, and if you want to think about it of the mNAV that you expect it to be on the day that you plan on selling in the future. If you plan on being a 5-year or 10-year investor, it's hard for me to hold on to a stock that long. So 2 or 3 years is kind of like my sweet spot, it seems, for really getting the juice out of a lot of the stock at the right time. And this, to me, is the prime time with Metaplanet. So yeah, that's why I'm here.
Yeah, I'm here too. I'm in for the long term, but yeah, at least like I want to see exactly HODL, right? HODL. Like I'm in for the long term, but I just want to see also like how the preferred shares are going to roll out, or going to pan out. So we'll talk about that in a later slide. Okay. Quick update on the balance sheet, Mr. Voyager, if you want to move us around. So when the balance sheet here, we keep this internally. I think Dylan also has his own that he presents every now and then. But from the end of June till now, we've basically like went up in a little bit of leverage in the form of a bond and came back down. So like we're like below 10% in terms of leverage. That's the main thing I want to point out here. Bitcoin NAV went from $1.2 billion dollars to like about $2 billion now. So Bitcoin NAV is growing. The leverage ratio is under control, and yeah, in order for the BTC rating right now is like about 17. So 1 divided by the 6. And then if you wanted to, l- calculate the drawdown needed for the assets to be below liabilities, then you would, Bitcoin would have to come down to like $6,000, $7,000 US dollars in order for that to be meaningful. So low leverage and just keep accreting. So periodically, I like to look at the balance sheet to make sure that check the health. All right, you want to talk about the shorts?
Yeah, so here is so in Japan, if you're listed on the Tokyo Stock Exchange, you have to report if you've shorted a public stock more than 0.2%. I don't know if that holds for individuals as well, or if that's just sort of institutions that have to report like that. But if you have shorted more than 0.2% of the stock, then you have to report. But then that information doesn't go public, and you have to report like within 1 or 2 or 3 days or something. Anytime your value changes, anytime the amount that you have changes of short, if you're over that level. But then the stock exchange only releases that to where the public can see it if that short position gets higher than 0.5%. So all of these, I don't know, maybe 12 it looks like of these guys, 12 or 13 of these guys have shorted more than half of a percent of Metaplanet, and have made it to where we can see them here. And this actually takes quite a bit of work. If anyone knows an easier way to get this short data like this, please let us know, because we've been doing it the hard way for a while.
Yeah.
But yeah, there's a place on one of the websites, I forget what it is now, but where we gather this data. But it's very, very time consuming to manually input the data.
Yeah, it's
This
the
is
JPX. Yeah.
okay. Yeah, JPX. So yeah, this is definitely hours of work, but it's a lot easier to maintain now, so it's not a big deal.
Yeah.
So what we see here is the percent of known short interest, and this is looking at the percentage of known, meaning just the public data, and then short interest, not even percent of float, but the percent of shares outstanding.
Right.
And so the true short percentage is higher than what you see here for two reasons. One, because the float is less than the shares outstanding, and then two, because these are only the shorts that have to report, that have shorted around 3.5 million shares or more. That's only, that's what you see here. Anything less than that, you don't see. So we're pretty much at all-time highs in percentage right now. And then I think the next one, let's see. Yeah, so now I think we actually hit an all-time high as of shorted shares. And again, this is just what we know of, right? So the true number might be in the 120s, 130 million, something like that.
Yeah.
I would guess we're probably 20 to 25% short interest, if you looked at it in float and then what the true number is. But yeah, from a raw number standpoint, we're now at like 87 million shares short. So yeah, we hit a new high.
Yeah,
July 30th.
there's a lot of down pressure on this stock from all these shorts, and it's not these institutions that are shorting it directly. They're probably just running the trade for their clients, right? Whoever the clients may be. But there's Metaplanet is the de facto proxy, Bitcoin proxy in Japan. So if a client wants to short Bitcoin, then that's they'll be taking a bet on that. The float, like you said, is a lot smaller than the shares outstanding. So I think our shares outstanding is about 680 something million, 680 million. Let's say, let's round. And our float may be a fraction of that. Like, I don't know, maybe somebody with a Bloomberg can look at it, but our float is probably a fraction of that. So there is considerable amount of short interest on this stock. Right? I think we can all agree on that. And it's growing. It's growing by the day, as you can see in absolute numbers and in relative numbers, as EVO, as Metaplanet is diluting more shares into the market. Even the relative number, like you saw, was climbing above 12%. Is that right, Climb? 12.
Yeah, I think it might have been like 13 something. Yeah.
Yeah. So
Somewhere in there.
even as the shares outstanding is rising, the short interest is also rising a little bit faster. So it's going to be interesting what's going to happen in the next a few months. I just want to see what happens with this, and let's not forget about our friends at Citigroup that are still buried from the early the late April shorts.
Yeah. For those that don't know or forgot, like Citigroup, the time that a lot of us started, certainly not everyone, but a lot of us got into this. For me, it's my first international trade ever. I'm not embarrassed to say that. I just never had a reason to leave the U.S. The U.S. always had enough variety with stocks, enough potential returns. I won't say it's easy to find a 10x in the U.S., but it's not impossible. And if you have a multi-year time frame, you can certainly find many 10x opportunities, I think. But so, it took something pretty compelling to pull me out of the US with an investment. But yeah, Citigroup, the time that we got in, they shorted they went overnight from having no shorts on the table, or less than 0.5% anyway, to having 13, 14, 15 million, somewhere around there.
Yeah.
And they still have about 13 million right now. So they haven't covered yet. Again, the data we get is 1 or 2 or 3 days old. So we kind of, have to wait for it. But yeah, it's sort of funny that they're still, as far as we can tell, pretty upside down. Maybe they've traded up and down to kind of raise their short cost. But they probably initially shorted around the $3 point, maybe the $4 point. So yeah.
Yeah, for those of you watching on your phone, it's that orange line at the bottom here around the May 1st is that Citigroup entering that position. They went, I think, from, if I remember correctly, it was 400,000 shares, so barely registered, to 13 million shares, like you said. So it was a big, it was not a good time.
It's funny, and here's another quick story, but the day that I started buying, and I was buying MTPLF, and I wonder if they were selling to me because I wasn't moving the price. And I bought I think the first day I bought 600,000 or 800,000 shares in the last hour of trading on a Friday. And before I started buying, there were only 100,000 or 200,000 shares that had been traded that day. So I was the majority of the volume, and I didn't move the price more than 5 or 10 cents. And I don't know, I just thought that was pretty hilarious. So it kind of makes sense. It was the same day. I mean, April 28th or 29th, I think was when they shorted all that. So it's just a lot of us got in. The shorts get bravest when they can sort of see the finish line, and for them, the finish line is probably 1 mNAV. I don't know, but I don't think we're going there anytime soon.
There's a poem, I think, floating around. We made a poem that's floating around about Citigroup somewhere on X. So if you find it, I think it's worth a read about the Citigroup shorts. Yeah, 3 million shares, man. Yeah. Okay. I think we're good with this short slide, unless you had anything else to add to it.
No, that's it.
Okay. Okay, let's talk about big tranchers. So Simon posted this a while back. I actually did not expect this to happen, but obviously for us US shareholders, we have to go through Schwab and Fidelity, or Interactive Brokers. And overnight, I think we just between Fidelity and Schwab, US shareholder base holds about 140 million shares. So that was 20% of the market cap. And yeah, Simon posted that, and Dylan acknowledged it, and the 2020 Ventures is no longer the largest shareholder, but obviously we're all combined and merged into under that one custodian for us. But it shows you the demand that there is in the U.S., and we're not done. I think I don't think, if you have to ask me, there's not many. There's still a lot more room to go here in the U.S. And all over the world. This is not just oh, that's it. 20% and we're done.
Yeah, the fact that it's a $5 billion company pretty much says everything that people should need to know there as far as what the saturation potential is of this. And yeah, it's not like all the U.S. holders that will ever have come in 1 or 2 months. That's certainly not the case. I mean, not to say there's not weak hands that have already been shaken out and maybe will be shaken out, but yeah, anyway. And also Interactive Brokers, they've climbed up on this list quite a bit. I don't remember what they were maybe back in March or something. But I mean, they're at like 30 or 40 million shares now.
Yeah. They also, you mentioned interactive brokers. I did not put this data in the slides, but I've been monitoring the cost of borrow on interactive brokers, and I think the cost of borrowing 3350 was skyrocketed to 15% annualized in February, and then it now it's grinding down and it's around 6 or 5% or so. But it's signaling to me like an oversupply of shares being lent, and there's also a lot of short interest. It corroborates the story that there's a lot more short interest on the stock. So just think it's interesting to keep track of those statistics, kind of the cost of borrow. I remember Grain was talking about, like he always, when he turns on share lending in his brokerage, he always keeps an eye out. Like if his shares get lent out, he's like, okay, like there's maybe some action going on back on the behind the scenes. So I think it's cool to keep track of that.
Yeah, for sure.
Okay. Oh, you put this together. Hold on. Let us move us out of the way. But you did put this together. Do you want to explain that?
Yeah, so this is from tip ranks. It's the only thing I've used them for, but I don't know if they're useful for much else, maybe. But here's 40 ETFs that hold Metaplanet 3350. When we got in a few months ago, I think the number is around 30 or 32 ETFs that we're holding. And this is more just sort of something I put here to say that I'll try to keep track of this in the future. And there's better ways to keep track of this than using tip ranks, actually, because they show the market value, but they don't show how many shares, and who knows when they have the price per share, but attached to these values. But anyway, it looked like a rough estimate is that these guys, the ETFs, hold something like 41 million shares, which is around 6% of shares outstanding. And one thing, like on that Bloomberg terminal screen that you shared a minute ago, like the top 20 holders of the stock. Yeah. So like on that, none of those ETFs show up because all of those ETFs, like I think the heaviest one owns like, a little over 1%, and they don't have to report, I don't think, unless they own like 5% of the stock.
Hmm.
So yeah. Yeah, which actually makes me curious about some of these. Well, yeah, that doesn't matter for now. But yeah, anyway, so that's neat to keep track of not only the number of ETFs that are holding, but also the amount of shares. And so I'll try to come up with a much better value for that
Right.
soon, hopefully.
Hmm. Yeah, I just noticed too on this slide here that Evo on the 7th of July still had like 27 million shares on their hands. So
Yeah, yeah, it's neat. Yeah, they're just around that 5% reporting requirement. So yeah, I'm not sure
yeah,
if the people that are under that 5%, if those numbers stagnate, or if they still have to update them, or I'm not sure how that works.
we'll know more in a few weeks. So we'll have some updates. Okay.
Yep.
All right. Switch gears. U.S. subsidiary. Everybody keeps asking about the U.S. subsidiary, and there was an announcement a week ago about that. So let's actually switch to the next slide. But let's give kudos to Compliant Degen. So he put together this structure, corporate structure of Metaplanet between Japan and the U.S. But back in May, let's walk back in time here. Back in May, Metaplanet created in Florida the Metaplanet Treasury Corporation and seeded it with, was it $250 million? I forgot, something like that.
That's
And
right.
then okay, 250. And then recently, so July 25th, the middle company here, Middle Planet Holdings Incorporated, was created, and then the controlling shares of Treasury Corp were given over to the holdings company, with if you read the disclosure, with the eventual goal to create a U.S. Another entity under the holdings company, and that would be a derivatives trading company. So we're gonna see some options trading, I think, from stateside. And the reason for coming to Florida in the States, well, Florida first because Miami is Bitcoin friendly city. Simon had a good meeting with the mayor, and also to access better liquidity compared to Japan. I mean, Simon has expressed that um, they're having a little bit of trouble, getting their bitcoins, executing the Bitcoin buys, and potentially the options I think are done through QCP Capital, so that's in Singapore. So just want to be at the heart, at the main artery of capital flows in the world, and be right here in the U.S. Yeah, he does. He does do great job complying DGen. His stuff is like so in depth, like so. It's like if anybody wants to get lost for a few hours into Metaplanet everything, just make sure to follow him and click on his stuff. And he does have also a background in actual compliance here in the United States. So you know, so it's a good point of view and refreshing. But yeah, so Metaplanet Japan still retains is still the mother company. I think there was some they had to put out a clarification after coming out with a US subsidiary update because people were like, "Oh, are they moving to the States? Are they uplisting in Nasdaq and everything?" Well, there's no plans for that yet. So this is just structuring, providing a runway for in the US for to run the derivatives trading, which Simon is a big fan of and Dylan too. So anything
Yeah,
to
and
add?
whether you're yes,
Okay.
yeah, both those subsidiaries, like the two parts, one sort of buying Bitcoin and the other selling put options on Bitcoin. With some of their cash to generate income to pay for preferreds or whatever else in the future. Both of these, a lot of people don't really understand, but it comes down to friction. It comes down to slippage. So it's not like if they want to buy 1,000 Bitcoin that Japan, the exchanges can't sell them 1,000 Bitcoin. It's the fact that, yeah, there's probably less Bitcoin on exchanges there, but it's also way less liquidity. So as far as Bitcoin changing hands or the put options, you need someone on the other side of the trade.
Mm,
And if there's just not that much liquidity, then there's going to be a price mismatch, or they'll have to be very awkwardly careful about um, how they place their buy and sell orders. But yeah, they really don't want to move the price. Just like when I started buying Metaplanet shares when it was $1 billion company, I wanted to not move the price because I was buying on US OTC and there wasn't a whole lot of trading activity at the time. So because the OTC didn't come out when the company started with Bitcoin last April, the OTC I think was released in like last November. So when I was buying in April, it was only a few months old. Not a whole lot of people knew how to do it. So or knew how to trade it, what the ticker was and stuff like that. But yeah, it really just boils down to liquidity and saving a percentage or two here and there on slippage. And so, it's not like a huge deal, but it's definitely a plus and a sign that they're growing large enough to really care about that.
yeah. Last time, and we'll get to it in the put options. We'll talk about that in a little bit. Like when they execute their contracts, like I think they swing around back in Q4 2024, they were swinging around like 220, 230 contracts, at a time. So yeah, they have to be careful. I think how they execute that. I don't know how the liquidity is over in Japan, but there's got to be a reason. Um, you know, and that reason is liquidity to come over to the United States. The second thing I want to mention on here is why not run everything under one company? Well, I think that's just for risk segregation. Like you have the Treasury Corp on one side, and then you have the derivatives trading company on the other side, and that way you kind of create a firewall and protect them from each entity from risk from the other one. So okay, all right. Okay, put options. So when Metaplanet first started doing options income, like selling cash secure puts on Bitcoin in Q4 2024, they reported 4.4 million profit or revenue, and then 5 million in Q1, and then now we're at Q2, we're at 7.6 million. I'm not sure they're still running those because I remember a previous disclosure saying that the assigned Bitcoin was just moved over to the treasury. So I don't remember that, but we can clearly see a sign that their cash secure puts sales are increasing and the revenue is increasing. So yeah, they have a demand to satisfy, and so that explains why they're coming over here. Do you have anything to say about this one?
Just one quick thing, and this ties into prefers, but just to say it quickly. So yeah, like the last quarter, 7.5 million basically from selling put options. And if you multiply that by 4, you get 30 million, sort of a 30 million yearly run rate, right? And then when you think about how much could that $30 million like per year, how many preferreds could that support? Well, if the preferreds were paying out 5% interest, then that 30 million could support $600 million of raised capital through preferreds. So, there's other things to worry about there, but that's the basic math by it, and why a lot of people say, oh, they're stupid, they should just buy Bitcoin with the money. No, and we predicted this like a few months ago.
Yeah.
They're laying the groundwork. It's really neat actually seeing it lay out. Like, I mean, yeah, I like being right. I'm wrong about plenty of things, but it was really neat, like being able to pick up what they were putting down in interviews, and you can see the climbing revenue here, and how little capital it takes to generate this revenue, essentially.
Yeah.
And then the low interest rate environment, and the real power, you can think of it as leverage. This income strategy versus and the cash it takes to generate this income being a lot lower, basically because the Bitcoin volatility is a lot higher, so they make a lot more on selling options than 5% a year, which is what they're having to pay out on preferreds probably. We'll get into that more later. But yeah, it's just another way to think about leverage. This isn't debt leverage. This is like income leverage, right? Like volatility leverage, or whatever you want to call it.
Well, they take the money. I think the capital comes from either a bond or from just like warrant proceeds, and they turn they set aside. I think they earmark about 5% for the options income generation. So, and then it just accrues and compounds onto itself, right?
Yeah, exactly.
And then if they get assigned with Bitcoin retracing right now, if they're still running IFT, maybe they'll get assigned, and like move some more to the treasury side after that's done. So we'll see. I do want to talk about this. So I follow this index pretty closely. This is BVIV, which is Bitcoin Volatility. Basically, think of it as like most of you will be aware of like the VIX, for the SP 500, S&P 500, which is basically the forward-looking volatility, for the next 30 days. So this is the same thing, but on Bitcoin. And it's basically a number, and we'll get into the details in the next one. But I wanted to show this because Metaplanet started selling options on Bitcoin in Q4 2024, and that's the red box, and then Q1 is the blue, Q2 is the orange box. But Bitcoin volatility was much higher. This is not historical. This is forward looking. So this is, when you're drawing that candle, this is telling you that in the next 30 days, we're expecting this expected move to happen. So, it shot up to like the 70s, 70%. And then finally, right now, we're reaching almost an all-time low in terms of Bitcoin volatility. We're like out of 40, so it'll be interesting to see what's coming up in the next quarters. But my point is, they were able to still, even though volatility has gone down over time, they still have been able to increase the revenues quarter after quarter, right? So, do you want to add anything to this?
Yeah, something, I think it just escaped me. It's something in one of Simon's interviews recently. Oh yeah, he was talking about this, looking at the advantages and disadvantages of selling sort of a 3-month out option versus like 12 or 13 weekly options. And anyone that's traded options knows the sort of pros and cons there, and that there's no like cut and dry best way to do it. Different time frames have, there's different advantages. Certainly you can lock in. If IV is really, really high, then you may sell longer duration to sort of capitalize on that, to really to lock that in. That's what I did with MicroStrategy in sort of late November, when the price right before it peaked. I sold some 2-month out call options on my position, basically, effectively locking that in. I could have instead sold a weekly, but then I wouldn't have been able to make nearly as much as the price dropped the following week. So locking in when the price is right, and when the implied volatility is right is really important to lock in further dated stuff. But yeah, there's a lot of different sort of things that they can do that are simple, but really interesting things that they can do with selling options to make money here. And then of course just deciding how much cash they want to put towards that.
Yeah. Yeah, we many ways to skin the cat. We'll talk some more about this. So back to BVIV, yeah. So it's a index, designed by the Chicago Board Options Exchange, and like I said, it's like a look ahead. So it's not historical vol. It's look ahead, 30 days. Basically, you take all the out the money puts and calls, and you calculate all the IV implied vol, and you give more weight to at the money strikes, and then you normalize everything into a 30-day estimate. That's a percentage. So that chart is actually a percentage. Then you get this formula. So basically, you can calculate the expected move. So if you take that percentage, right now we're about like 40, so 40%. If you take 40% and you multiply it by the square root of the duration you're looking at, so we're looking at 30 days over 365 in a year, so annualized 40. So you get that 11.4% plus minus. So basically, there's a one standard deviation, so 68% chance that Bitcoin is going to stay within a plus minus 11.4% of current price over the next 30 days. So, and if you want a bit more certainty, you can say there's a 95% chance that Bitcoin is going to stay within 23% plus or minus 23% of the current price over the next 30 days. So if you're an options trader out there, this is what you can use to guide your decisions and trading decisions. And as Climb said, if the forward looking volatility is high, then that's probably a good time to sell some options. Right now, like we're at all-time lows, so be interesting to see where everything goes with all this Bitcoin stuff going on, especially too with a recent down move. So I'm expecting the BVIV to rise a little bit. This is continued. So if you have a table, you can have a table and just do your run your math for your expected move. So you can take the inverse. If you have one standard deviation, so 68% probability of a price staying within a range, then you just take 1 minus 68, 32%. You only have a 32% probability of the move being greater than moving outside of that plus minus range. Obviously, the higher you go in BVIV, then the less you're going to stay in the range, the more you would be inclined to get out of the range. So you would adjust your strikes and expiration accordingly. So just a little thing that we want to talk about. I'm sure they look at that too when they trade Bitcoin puts. Okay. There's been quite a few actually interviews from last time. I think a good one was the one with Bonnie and the one with Richard. I think it's pretty darn good. Obviously, Dylan's interview with What Bitcoin Did, Danny Knowles, is also really, really good. All these videos, if you haven't watched them, Climb and I, everybody would recommend you to watch them. We do categorize them. We've created a playlist actually on the Metaplanet Dojo YouTube. So if you click on playlists, we are starting to just regroup them over there so that you don't have to kind of search endlessly and see. So for now, it's just Simon and Dylan's interviews being grouped into a playlist. So easy access, easy reference that way. PFIC, let's just talk about that. So that PFIC status was, for those of you who don't know, it's a tax classification, and there's a thread, I think, on the Dojo Discord that's at, I don't want to look, I want to say like 3,000 posts, and that thing was growing like a monster out of control. And Simon did say that he was gonna consult, and they came back with this disclosure, said that they don't expect to be classified as a PFIC for year 2025. So take that disclosure, take it to your accountants, people, and decide what you want to do. But that's what the official word is on that. That hopefully puts an end to some of the FUD, because for that was going around for a while. Climb, anything to say about this?
Yeah, for sure. I learned, I've learned a few different times in my life, but I learned the harshest lesson last year when MicroStrategy was at all-time highs, 540. Like when my solution, I did pretty good at identifying the top or the day before or whatever, but it only matters if you take advantage. If you have a good bet, that's great. Like, people pat you on the back, who cares? You need to capitalize on that. If you don't capitalize on it, it doesn't matter. It evaporates, right? And I did okay. I sold covered calls against it and locking in some of the money. But the reason that I didn't just sell all of my leap options was because of short versus long-term capital gains. I'm in the highest tax bracket, so that's basically a 20 versus, let's call it 40%. And that I let that make the decision for me. And I feel like an absolute idiot for that, right? So ever since then, like, when the PFIC FUD came about with Metaplanet, I just sort of laughed it off. And I wasn't laughing off people's concerns. They're legitimate concerns. And more so because of the nuisance, if it is PFIC, of having to know that and, inform your accountant and stuff. But yeah, anyway, it's not necessarily that I didn't think it applied. I didn't know either way. I'm not a tax expert, but I wasn't going to let it talk me out of what I see as a 10 to 100 bagger. And, so now just, seeing that whole FUD cycle go through where it was all people could talk about. And then now just seeing it like disappear. And ultimately it's up to the IRS. And that's why these companies can never say like 100%, we know we're absolutely not, PFIC or whatever. It's the IRS's call. So these companies are not legally allowed to make that call, but they are allowed to give guidance, and their guidance is generally very much in line with what the IRS would do. Like, it's in everybody's best interest to act in good faith, when they share disclosures like this. So it's really neat seeing it as an official disclosure. Certainly still, double check everything. I can't imagine just not double checking everything still, but yeah, I don't think it's PFIC. It doesn't seem to be. So it's exciting to see it.
Well, and when that happened, I remember all the memes coming out and domino effect, like mentioned PFIC once on Discord, and then the mNAV goes back to 1 on the top domino. And I'm like, I mean, I was kind of laughing. Not the concerns. The concerns are legit, but just the buzz, all the buzz that was going on in that thread that's grown to like 3,000 posts, and I'm like, okay, I'm just gonna leave that for later. I'll get the too long didn't read for people who have spent time doing research or something. But yeah, I did not want to spend that much time and energy just frantically researching and then just, oh, you know what, oh, PFIC, let me sell everything out. Like I wasn't about to do that. So glad I didn't. Yep. And it's really nice actually of Metaplanet leadership to listen to the concerns, I guess, that were voiced, and just address it in a official manner through a disclosure like this. That they didn't have to, right?
Yeah, exactly. They didn't have to. So yeah, it's nice to see, and I think elsewhere in this disclosure, they talk about sort of the reasons why they believe they're not a little bit more in depth, or there's more of a breakdown than what we showed here if you want to check it out on their website. So
yeah. All right, so that's gone. All right, so Shinpei Sensei dropped us a little bomb here, and basically the agenda for the extraordinary general meeting to be held on September 1st, and there's 3 proposals. So the first one is the number of authorized shares. We'll go through that. Then number 2 is the place of holding of the meeting, where we're going to have the meeting. And then number 3 is for the preferred shares. So everybody wants to talk about the shares, preferred shares. We'll go through all of this. Proposal number 1, so authorized shares. This is a cut and paste from the slide deck from the company. So the current 555 plan, at the onset of it, we had 759 million diluted shares, and we were going to add, pump in an extra 555 million, and then we were going to bump up basically against the authorized limits of 1.6 billion, with only 300 million remaining authorized shares after that. And if I remember correctly, every time you request to increase the authorized shares, the max you can do it by is by 4 times the number of outstanding shares. So if we are at 680 million shares today, and you multiply that by 4, it would give us 2.72 billion shares. And I remember Dylan explaining that in the early days of the company, it was like growing pains, right? It was a challenge because they had so little shares, and so they have to like, they have to do a reverse split, and then they have to like grow, and then apply for four times the outstanding shares in terms of authorized shares, and then grow up to that limit, bump against it, and then just request extension that way every time. So yeah, it's now we're actually bumping, kind of making building the runway for future expansion. So it doesn't mean like we're diluting like 2 billion shares right away. No, it's just like Strategy did. Basically, you're just building the runway for future expansion because you don't want that to be the limiting factor of your plan. So I went ahead and I made my own with Figma, pulled up the Figma tool here, and to show you what that would look like after, if we apply today and we got the authorization today, if the company gets the authorization today to go up to 2.72 billion shares, this is what it would look like. So, we've actually increased up to 866 million diluted shares today. There's 465 million shares remaining on the plan. And if we did that today, basically we'd build a big ass runway in order to keep expanding and diluting. So yeah, that's what it would look like. Do you have anything to say to that?
No, that's basically it. Yeah, I mean, like exactly what you said. Every time that they bother to vote on expanding the share count, that doesn't even ever that never means or guarantees that there ever will be that many shares that exist.
Right.
Like you said, that's just opening up that sort of like temporary hard cap. It's kind of like raising the debt ceiling. Probably horrible analogy, but anyway. So yeah. So like, if they're going to bother doing it, they have to do it during a shareholder meeting typically. But since they're having this extra meeting anyway, they're getting this out of the way, opening that runway up. They don't have to worry about it. They have the flexibility in case the opportunity arises or the next time that they would need to or want to do this. They don't need to do this. It's just a want.
Yeah, this is just like building up. It's like enlarging the sandbox that you're playing in. It doesn't mean that you're going to build all kinds of slides and like bouncy castles and whatever. You're just like enlarging the sandbox so that in the future, if you need to build more things, the space is there. Big, beautiful plan. Yeah, thank you, Sid.
Yeah, exactly. Yeah, and when I say want versus need, like what I'm saying is that it's, of course they want to keep growing, but they don't have to, is my point. Like to stay, for anyone that's, hearing that and thinking something else. So if Metaplanet right now decided, you know what, we're big enough and, we have enough Bitcoin and the rest of the world can have the rest and fight over it and we'll just hold ours and Bitcoin's going to go up in price and we'll do great and just sit back on a yacht and, and drink all day. Well, like they can sort of do that. They can stay afloat by selling options on Bitcoin and not growing. But guess what? Simon is, I think, the biggest single shareholder of Metaplanet because he has like 15 million shares. You saw earlier, 15.5 or something million shares. And then he's like the largest shareholder in 2020 Ventures, I think, and they have around 40 something million shares. I don't know how many shares he has of that. And then I think his wife has some shares as well. So like, the reason why people want to grow companies that have already grown substantially, other than because they're supposed to give the shareholders the best value, right, is they have skin in the game as well. They're not done. People are still growing. People want more. And especially like if I see a 10 bagger, I'm going for it because the alternative is keeping my money in cash and sitting there and identifying something. And again, the opportunity evaporates if I don't take advantage of it. Other people get it, but I won't get it. So you can be right all day long, but if you have to be right on a bet and actually be in the bet, it can't just be words, right? So anyway, Simon is the biggest shareholder and they're going to continue doing this and just always make sure there's enough runway. Every time they have a vote like this, they'll probably just go ahead and do the full 4x, whether they intend to use it or not. But yeah, it's exciting to get that out of the way. And that was the only thing that we knew for sure, like a couple months ago. Obviously they'll vote on 4xing the hard cap, right? And then we started, sort of assuming that maybe they'll be doing a vote on preferred as well.
We'll talk about that. That's next, actually. So this is actually the March shareholder meeting in Tokyo, and I think that place was like, I think Jake went. Yeah, Jake did go there. I think Plan M too, but the place was packed to the gills. There was no extra seating. People were standing in the hallway trying to catch a glimpse of the staff and management and the presentations. And so, speaking of expanding, like we're expanding the authorized shares. I think the physical space is like, unless we move to like Tokyo Dome or Budokan, it's like not big enough anymore, right? By the way, if we could happen at Tokyo Dome, that would be great. But because there's so many international shareholders now too, Metaplanet is, with proposal number 2, trying to expand the meeting location to not just be physical anymore, because the Japanese regulations allow them to have a, say that they have to have a physical space, or they have to, but now they're amending the articles of incorporation in order to allow that meeting to be done online too. So those of us who are not going to the September meeting will be able to live stream it. And so I'm told there is a verification process to make sure that you are a legit shareholder, and in order for you to attend that meeting virtually via computer technology. So that's pretty cool for those people. In order to also attend the shareholder meeting itself, otherwise you do have to also take part in a raffle in the lottery in order to get a ticket to go. So I think some people already booked their tickets to Japan, but hopefully they can get a lottery and win that. Yeah, she seems very happy to be at the shareholder meeting.
That's funny. One thing too, like the picture of the full that full March shareholder meeting. A lot of us got in after April. Obviously people were in before we got in. People were in last year and before we pulled the trigger. But a lot of money has come in as you pulled up, looking at Fidelity and Schwab and Interactive Brokers, now being very high up in the ranks there, right? Of collective holders. Looking at retail that's under their umbrellas. But in this picture, you don't see us, right? We're not there. And everyone in the dojo isn't there. The dojo didn't exist when this picture was taken, right? When this picture was taken, the X community, Metaplanet Madness, our sort of our sister community, had like 550 maybe members, as like 9,600 or something today. And then, now there's, our community and, the X community. So, a lot of people are like, oh, it's just US investors or something. No, this is not the case. Like, yeah, we might hold a strong 25% or whatever you want to estimate. And that is strong. Like, that's very strong. And, sped up, sort of helped pull the future forward for the company, I think. But, with inflows, because it all boils down to inflows and saturation and looking at that, right? That's what it all boils down to. But yeah, we're not in this picture. This is before us, and they're packed. And a year before this picture was taken, there were like what 10 or 15 people in there.
it was like just like it looked like a classroom, it looked like a classroom and with some student desks. But just to touch on that topic some more, the number of individual shareholders, it was just a few weeks ago was like 64,000. And now is around 128,000. It's also available in the analytics on the website, but 128,000 it's like we're doing this in like console bits technology or something. 64,000, 128,000, and I don't know. I think that this shareholder in that number is probably like Fidelity and Schwab are probably just counting as one on there, right? I don't know. Somebody correct me if I'm wrong. Yeah, they're probably counting as one.
Yeah,
and I put together, I photoshopped together like a meme with a Bloomberg terminal and the Metaplanet Dojo as a joke, like owning 100 million shares. You remember that? Together, owning 100 million shares in the dojo, and then I put up first the rankings. But
that's right.
it's actually not far. If you take like Fidelity and Schwab together, it's actually not too 140 million shares. It's actually, that joke may have been kind of somewhat accurate, So
yeah, I would say between the X communities and Discord, I'm sure that we collectively own 100 million shares or more.
Yeah, that was funny. I was like, oh, I didn't expect that. So Okay. This is just to say that, yeah, if you attend the virtual meeting, don't be rebroadcasting it, because otherwise Simon will come for you. Okay. Preferred shares. So to attend virtually, you have to pre-register to. Yes, Christina. You have to go to this link here. Well, don't click on here. This link doesn't work. But you have to go to the website and then go to look out for this link here and register. And then you do have to provide proof of shareholder status. So there's a process for that's gonna allow them to do so. They do explain that they expect the demand to be so strong and the verification process to be kind of slow. So to bear with them and be patient. So if you want to attend virtually, I would start sooner than later.
And they do, I need to do that actually in the next few days. And they do, as it says, I think on the next slide is like, they plan on halfway down, a recorded version of the live stream is planned to be made available for a limited time on our official website. If people are probably asking like why, I haven't looked into it, but I would just have to guess that this is just Japanese standard sort of regulation stuff. Total guess, but I can't really imagine it being something else. But it's going to be exclusive anyway. It kind of makes me more excited to actually attend online, and I think it's at like 9:30. I could be wrong, but I think it's at 9:30.
If it's
I might be mixing something up.
if it's
Okay,
9
yeah,
a.m.
9:50.
JST, then it should be about 5 p.m. 5 or 4 p.m. Pacific here the day before.
Okay, so I guess it won't be too bad.
Like that. Yeah.
Should be good then.
Okay. Take it away, dude.
Yeah, this is just, so a lot of people don't realize, they just think, oh, Metaplanet's a company that's trying to copy strategy, and they're just, like, what's like the meme of I forget the guy looking over at the other dude's like test, and he's like writing down the same answers, right? So that, people might think that that's what's happening, right? Well, that is not what's happening. I mean, that's what's happening to a large degree. There's no reason not to, if you're like fighting a fire, right? Sometimes if you're in a burning building, maybe you hold on to the guy's shoulder in front of you, so you don't get lost in the fire. But they're able to speed run this game. If you watch, so I tuned into Strategy's recent earnings call, and one thing that was interesting, I mean, they didn't touch on it a whole lot, but they did talk about, of course, they spent a lot of time on preferreds, and they talked about convertible bonds, and I think maybe it was some of the questions at the end, I can't remember, but they're not, before, even 6-8 months ago, they were pretty positive about convertible bonds. That was a huge part of the 21-21 plan, I think, right?
Yeah,
It wasn't like 21 of that was like
21
convertible
billion
bonds, I think.
convertibles.
So,
Yep.
yeah, and that's history now. So, a lot of this, it's a science experiment, and they are in the best of ways, right? They're trying to feel around, and part of it is things that, they can figure out. Part of it is things that they have to sort of poke the market and see what comes out the other end. And with these preferred products, it's seeing, they can sit and think all day long what's the best, for the assets, or the total addressable market, what is the best product market fit, right? But really, it's about strategy. Talked about building out the yield curve, and you can see now, we'll talk about that more in a little while, but Dylan isn't the guy that just, looks at someone else's test and just copies down the answer. And one thing that was neat in this sort of highlighted portion at the bottom, he says, we also plan to introduce a case study on the capital structure, including the 4 types of listed preferred shares of the 4 MicroStrategy or strategy preferred listings. And so, reading Dylan's posts, like if you guys haven't read some of Dylan's like really longer posts, like for the last like 5 years, it's not like he's just starting like to do this. He's theorized a lot of this stuff before. And the fact that they're this close with strategy and always tipping their hat to strategy, and then able to take the best parts of what strategy is doing and incorporate them, because time-wise they're behind, right? They started late, relatively. But yeah, not just that they'll be talking about this in the Q2 earnings and in middle of August, and then the shareholder meeting September 1st, but that they'll also be diving in deep, and you can bet it's going to be good. So I don't know when this is going to be, what format, but I'm excited about it, and I hope there's a slide deck, so we'll have some material
Yeah.
to talk about.
So like you talk about Dylan, and he doesn't just copy. Part of me thinks that there's like a group. They're on the group text with like Simon Dillon and like Michael Saylor, and then they're like, "Hey man, can I just get some of that preferred share data stuff that you're doing, something like that?" But I think that, yeah, they obviously talk to each other, and they, Saylor wants Metaplanet to succeed, and he's like, "Here's the playbook. It's open source. Do it and learn from our mistakes, get into the slipstream, learn from our mistakes." And you can tell that they've been hanging out and just talking. So, like, you're talking about April 2024 to now, so barely a year, and now talking about introducing prefers, where strategy's been doing this for 5 years now, and then before introducing prefers. So yeah, they had to go through all that pain and trial and tribulations and growing pains, just so the other treasuries can now can benefit from that open source, like research. So I think it's pretty cool.
Yeah, they get to. Yeah, Metaplanet gets to totally skip over. I mean, they may still do a convertible bond. If they do, Simon's talked about. I mean, he talked about that on stage in Orlando, I think, right? At Strategy World, like in, what was that, like March or April. But he's unsure about convertible bonds for Metaplanet, and that's back when Strategy was still seemed pretty positive about them from what I was hearing at the time. Maybe they weren't behind closed doors, but at this point they've certainly steered away from them. And the beautiful thing is that not only does that inform Metaplanet, that's probably a road they don't want to travel down, but again, like what we talked about, Metaplanet was already figuring this out, alongside Strategy. So sort of timeline, they were very cautious about convertible bonds, and it's amazing how many people kind of pushed back on some of us agreeing with like Simon about like, why he might be cautious about that, because of the delta hedging and stuff, and keeping it. It's not necessarily great for the stock price, and that's a little bit awkward. Anyway, I mean, we could talk about that a lot more, but yeah, basically, it's really neat to see that Simon and Dylan are able to figure this stuff out for themselves, and sometimes see that certain paths aren't the right way to go. Yeah.
I also want to add. So for those of you who don't know what preferred shares are, so they're an equity that sits above the common shares for the company. Usually, you don't carry any voting rights, and basically are like, they protect the common shares from being diluted, right? And they are senior in the capital structure, meaning in the event of like a liquidation event or bankruptcy, they would be prioritized in getting claims to whatever assets the company is still holding, that they're able to sell and get stuff from. So yeah, so that's what prefers are. And the convertible bonds, the inconvenience with them is that they sit on the debt side of the uh, balance sheet. So preferred shares don't sit on the debt side; they sit on the the equity side, and the dividend burden every year is basically all you have to worry about. And convertible bonds, if they come due, they come to maturity, then you have to keep refinancing and rolling it out. And that's the problem. So you just have this principle and this refinancing cycle that keeps looming over you, whereas with prefers, you don't have any of that. All you have to worry about is the dividend burden, like yearly. So how are you going to take care of that? And we'll take a look at that too. So again, preferred shares. This is the thesis is that in Japan there is, so Japan being an Asian country, and Asian people, I can say that I'm Asian. Like, Asian people love cash, just sitting on cash bill, like cash under your mattress, cash like everywhere, right? Cash in your bank account, just doing nothing. And the even though the yields are rising in Japan, like the JGB has been like raising rates a little bit, but like the yield is so low that people are so starved of for yields over there. So they're basically keeping cash that barely grows. It's doing nothing and probably just getting eaten away by inflation anyways, and by the policies of the Bank of Japan, BOJ. Um, so preferreds would would fill a gap in that environment where there's nothing that they can buy. There's no asset that they can buy that will give them a sizable yield on the return on their investment, and that's fairly stable. Can confirm a lot of cash too. Thank you. So yeah.
Good to know. Good to know.
Okay, yeah, I'm getting confirmation here. So, it's and they also this is the second paragraph here. This would allow us to offer a range of investment options tailored to both domestic and international investors. Interesting. So it's no, they're not saying just like, oh, the prefers will be just for um Japan. Like they may be either prefers or some other assets like would be a good candidate for international investors. So that is an interesting thing, right? And then for those of you, and we may talk I may talk about this in a dedicated macro episode on Japan, but excellent resources to read are to watch are there's a book called Princes of the Yen by Richard Warner, who's an economist who was in Japan and was like part of the Japanese economy for like a long time, and uh, basically talks about how post World War II, how Japan fell into the situation that they are in today in terms of their economy, and the Bank of Japan orchestrating a maybe like a change of order, like a new order, by basically like pumping uh assets and through window guidance, by pumping assets, pumping up the prices of assets, so houses, stocks. At some point in time in Japan, like central Tokyo real estate was more than the entire real estate of the state of California, right? So you're talking about like crisis. So they engineered that bubble in order to kind of reset the order and change everything. So now the BOJ and the Ministry of Finance are um like kind of separated and everything. But it's a good read. There's also a documentary on YouTube that you can watch. I think it's about an hour and 30 minutes long. Worth the watch. But it explains how they fell into this like yield starve environment. Yeah, he was also on Carlson Tucker's podcast. Yeah, very very good. I did listen to part of it, not the whole thing, but um, I think it's a story that's undertold and yeah, like not many people know about. But it's not just they don't have the same situation that we have here in the United States, is what I'm trying to get to. And part of it is induced by us as a country in the US, what we did to help them get out of the post World War II thing. So anyways, tangent, I digress. Just wanted to point that out for those of you who'd be interested. Maybe we'll talk about that in a later episode. Do you have anything to add to this slide, Mr. Klein?
Sure. One other thing that we talked about, and like I remember getting some pushback like a month and a half ago about, I was saying, oh, I'm pretty confident they'll want to vote on preferreds at the September meeting. And the reason I was growing more confident about that wasn't, well, the reason I was growing more confident about that was because otherwise they'd have to wait until March, right? And just like expanding the upper bound of the share count by doing a 4x of it when they can, as they need to, it makes sense to get the red tape done with and get the shareholder approval done with. And that doesn't mean that the product's going to be released that day or the next day or even the next month. But it's just red tape to get out of the way. So they have every intention. They've dropped lots of breadcrumbs, right? They have every intention of going the preferred route. It's really great to see two products released at the same time. But yeah, there is shown at the bottom, no issuance has been finalized at this time. So they will be going down this route, but getting the plans made now and the votes out of the way, in a few weeks here. And then getting the final approval through Tokyo, whatever else they have to do. My rough guess now is that we'll have the products somewhere between October and December, but we'll just have to wait and see.
Yes. Yeah, you're right. I didn't even think about that it would have to wait until March otherwise, if this doesn't get through now. Yeah. Okay. As you mentioned, I love this because we were talking. If you go back to episode number 1, we were talking about this with Climb on Air, that we thought that the Bitcoin, cash secured put income options income, I'm sorry, was scalable enough in order to pay for future dividends and on preferred. So there you go. Now they just said it. So as for the source of dividend payments, we anticipate using revenue from our Bitcoin income generating operations and using a portion of the allocated capital raised through common equity offerings, so the moving struggle warrants. So I think then the next statement. So they want to cap at 25% of BTC NAV. So if we have BTC NAV of 2 billion right now, then 25% of that 500 million. So they would be capping at 500 million the preferred offerings, which would allow them 4x basically. So you can still get a 75% drawdown in Bitcoin and be okay. So yeah, so they wouldn't. Yeah, they want to keep it a minimum of 4x BTC rating. Do you want to talk about the yield too in here?
Yeah, and real quick on that 25%. So keep in mind it has a little bit of a iterative property to it, right? So it's not. So if you have $2 billion and then you sell 500 million of initial preferreds, then now you're at that 25% of sort of like preferred equity value over the NAV, right? But the thing is that 500 million that you just raised, you're going to use most of that to buy Bitcoin. Some of it will probably go to the income bucket, but the majority of that is going to go to buy Bitcoin, which then enables you to buy another. So you can kind of do like a fourth plus a 16th, I think, plus a 64th, and it just keeps going forever, right? That would be like the infinite math, I think. But it ends up being, I don't know, a little bit closer to a third than a fourth, perhaps. But because of that sort of like the way it assists, right? It moves the denominator and the numerator, right? So that's just neat to think about. And then in the recent, so here they say for both of these, for the Class A perpetual preferred, which is the non-convert, sort of like Strife, and then the Class B perpetual preferred, which is the convertible, probably sort of like Strike. Yeah. Both of them highlighted down there not to exceed 6%. And so, I'm not sure how they'll sort of control that. That'll be interesting, but it won't exceed 6%. And if you listen to the recent Byworth episode that you showed the picture of earlier, with Simon and Richard, in that one, I believe, and what I took from what he was saying was he really doubted that it would be anywhere over 5%. So the hard cap is 6%. The realistic cap is probably somewhere like 5%. And keep in mind the interest rates in Japan are like 0.5%. So just like what Strategy talked about in their quarter 2 earnings call recently, they were basically saying that spread between what customers can get in money market funds and what they get paid with us, that spread will tighten over time as trust in these products grows stronger. And part of that is just continual payouts. I mean, the life of a product, right? If it's only alive for a month and hasn't had a payout yet, then some customers they don't hear about it. They don't hear their friends saying they got a payout from it, at work. Like the story isn't there. The trust isn't there yet because it's brand new. From the general population, right? Like a lot of people that already love MicroStrategy love these products, but the general population has to be sold on them, for the inflows to continue, right? So that spread will tighten, which then makes the ultimate spread that these companies concern themselves with, which is the Bitcoin CAGR, the average, the compound annual growth rate, like that needs to outpace what they have to pay on these preferreds for the debt to be worth it. It's equity, but it's like it's like debt when they're the yield is like debt, right? So yeah, 6% is the hard cap on these products. 5% is more of a realistic sort of cap in my eyes. So I'm sort of running the numbers on 5%. And realistically, they may be lower than that. And certainly once the public trust these products more, there's a huge market. A lot of people say, oh, there's no preferred market in Japan. There's only 4 preferred products in all of Japan. That's true, but that's not a demand problem. That's a supply problem. And Metaplanet is here to meet that with these products.
Also goes back to if you listen to the What Bitcoin Did podcast with Dylan, he talks about what do you back your preferreds with? Because he was talking about a crypto chain like DAI, and they were trying to back it with they were trying to back it with like ETH, and then nobody was taking it because it was like, well, why would I do that? And then it was capital efficient, and then eventually ended up being staked by like a stable coin, right? So it's the quality of your collateral like matters a lot. If you're collateralizing your prefers with Bitcoin, like you said, that has a high CAGR, historically, then the difference between the arbitrage between that and then the dividends is the play there, right? The dividend burden is the play there. So as Bitcoin grows, like the dividend burden is going to be like a it's a minuscule fraction of the Bitcoin NAV, right? So it's gonna be like, and people who buy these shares would give up all the upside on Bitcoin, but their dividends are powered by Bitcoin upside, basically. Um,
Yeah, for sure. There's a reason that people didn't do this with gold. I think I've asked myself a lot of times. It's a basic question, but it'll bother you if you think about it too much. And until you sort of figure out that a lot of it boils down to the CAGR, just not being there
Yeah.
for gold, right? So I mean, it gets there eventually, but like it can be pretty sluggish for many years.
Maybe Peter
So,
Schiff will offer gold-backed preferreds.
yeah, yeah,
So and then to touch upon the thing you mentioned, the credit spreads tightening. So so when the credit spreads, for those of you who don't know, like credit spreads, when we say credit spreads tighten, it means that so you have the risk-free rate, which is basically what a government bond offers you. Like let's say it's like 4%, and let's say you offer a preferred at 10%, and people pile into the preferred at 10% because 10% is better than 4%, right? So as the price of the as people pile into that, it's going to drive up the price of the preferred, and the effective yield. Like you're still getting your $10 per share per year in the case of the strategy preferred, right? Whatever STRE. But when the price of the asset goes up, the effective yield, like goes down. Like you're not getting like 10% on your $100 anymore because you paid $200 for it. So now you're only getting like 5% on it, which is still above the 4% of the risk-free rate. That difference between that 5% and the 4% is what we call the credit spread, right? So how many basis points above the risk-free rate, the government bond, is that instrument giving you? That is the credit spread. So when we say the credit spread's tighten, it means like there's your risk-free rate, here's the effective yield coming down, and how tight can you get that spread to be? And as the spread tightens, then it means that the price of your assets, is going up. Effective yield goes down, the price of the asset goes up. So, and now if you're ATMing, if you're running the ATM at a high asset price, then the torque, like strategy, like conceptualize the concept, the word torque, like the $1 of that preferred, like now you're not selling a preferred share for $100 anymore, you're selling it for $200. Well, that $200 still buys $200 worth of Bitcoin. So now you're selling one share, but you're getting like twice as much Bitcoin onto the balance sheet. So it's crazy. It kind of compounds onto itself. And then you do what you said, Climb. You loop it. Or you talked earlier. I wanted to say, but you loop it, like, meaning you sell the preferred, buy the Bitcoin, which juices up your NAV, right? So now you can actually sell more preferred so you can just keep doing this thing, like you loop and then you add a fraction and fraction and fraction like that. Yeah. So many things you can do with that. But yeah, the cool thing about prefers, I'm going to repeat it, is that there's just a dividend burden every year and there is no refinancing risk. And then you can play it so many different ways, by like Strategy has done, like including like callable conditions. You can make it callable, so they can, like, exactly, thanks for that chart, like you can put a callable like on a stretch, right, in order to kind of regulate it. You can play with the dividends. Obviously, you can vary the dividend every, readjust it. You can play with the frequency of the dividend. So there's a lot of modality going on here. But yeah, I just wanted to mention that. You can play with duration. Is there I think there's some questions from the preferred in the preferred chapter. Let's talk about that. I think people love the prefers. I prefer preferreds. Is the 555 plan separate than the BTC that will be bought with the preferred? Yes, that is separate. Like when they came out with a plan, yeah, there
Yes.
was when they came out with that plan, the preferreds were not. I'm sure it was in the back of their minds already, right, as they were, um, the, coming up with the plan, because Strategy came out with the prefers in February, I believe, February or March. So it was in the back of their minds, like, kind of like, hey, should we go into this in the future? But it was the 210K Bitcoin that is to be acquired by the end of 2027 is solely through, like equity raises on the common. So that's how the plan was designed. So the preferreds, if they're enacted soon, like should even be like speed up that process, be more accretive. But the plan is still the plan is still like the 555 plan still stands alone on its own. The preferred would be like another tool in the toolbox, in the toolkit. Do you want to say something?
Yeah, I mean, it's like playing Halo single player or playing it co-op, right? Imagine right now. I mean, they won't release the products today, but if they did, they could raise 500 million to be a quarter of their net asset value of their Bitcoin holdings, right? And that 500 million that they could raise from that would be 500 million that generated yield, where they didn't have to sell common shares. Not to say they won't also do that. They have two paths, right? Two different levers. So I mean, it's way better than I'm making it sound. In a bear market, if mNAV is 1 across the board for all these companies, they can still sell preferreds, because people still want to people still make money at their jobs in Japan. People still want to funnel their paychecks into a product that's going to pay them, 4 or 5 or 6% or whatever, and let the money work for them, right? And maybe retire. So yeah, it's really neat thinking about all the different ways that this is going to help. But yeah, it's really like playing co-op and having another shooter next to you, and now you don't have to worry too much because someone else has your back, right? So the preferreds have the back of
The common.
some people, yeah, of the common, and of defending 1 mNAV, because otherwise the only solution, if during a bear market, if you were less than 1 mNAV, then technically speaking, you'd sell Bitcoin and buy shares to increase Bitcoin per share. Now, I have come around. I used to argue online about the other side, but I have come around after listening to Saylor more and Simon more and understanding the preferreds more. The preferreds open up that avenue where now that's the solution, right? That's the defense. That's the shield for mNAV. And not, I don't think it would need that unless it was a bear market or there was some other serious issue where mNAV would be super low like that. But it is nice to know that there's a way to generate yield that's not mNAV dependent, and has much higher torque. Some people are asking why they didn't release a stretch product. I've heard that from quite a few people, and I get that feeling. I understand that, but I think the reason why is because they, they know that that's going to be a good product, but why would they want their best product to be their first preferred product? Because they're trying to open up preferreds in Japan. They're trying to help people understand preferreds in Japan and open up that market. And I think they'll do a really good job of that. And so doing the convert, which is going to be talked about, the one with the convert is going to pull in international inflows, whereas the local, lower yield ones are not, for the most part. I'm not going to buy something that they release that's going to pay me 5%. But Japanese investors will. Would I look at the one with the convert? Sure. It depends on the terms and the timing for it, right? Some people want to get paid 2 or 3 or 4% and still have some upside if the stock doubles or triples, right? And so that's going to be marketed to them. But they're just going to try to fill this whole thing, and they don't want, this is just me speculating, but I don't think that they want their best product to be their first product here. And their best product probably is going to be something like the stretch product, which has a pegged price and a fluctuating
rate
payout, right? Another, I won't say more. It's kind of going late, but yeah, it's fun thinking about like trying to reverse engineer why they went a certain way. And then like when it clicks, so it's not like, sitting around making up reasons why they did something a certain way. It's actually like thinking about like, what did they figure out that I haven't seen? And then once it clicks, it's like, holy crap. And we probably still don't see the whole picture. But yeah, the convert is something I thought they would skip over. But then I realized, and like what they say up there about it also being, or maybe it's on another slide, but about them also wanting these preferreds for international investors. Well, international investors are going to want the ones with the convert. So that's very exciting, and I just can't wait
You
till
mean
I
the
have them out.
convertible clause, right? Where they could convert into the common? Yeah.
Exactly. Yeah. Some upside movement, because, you have a product like Strife in the US. Well, Strife will go up when rates drop and when trust increases on those products. It'll get repriced to a lower interest rate, a higher price, right? But with Japan, it's already down at the bottom. Interest rates aren't really going to go lower, most likely, right? They're already pretty much at zero.
Like, yeah.
So you're not going to get increase in the base of these products except through trust increase, which then decreases that yield spread, right? Which then is going to reprice the products higher somewhat, right? So there's not two reasons they'll be priced higher in the future. There's one reason essentially in my mind, but it's more of a local Japanese product. But yeah, the ones with the convert clause are going to be very interesting for a lot of us.
Before I answer that question there, when you're talking about Strife and Strike, the longer duration ones, they also are the most volatile ones out of the preferreds, because you're talking about long duration, right? So if you go back to Stretch would be the quote unquote stable coin, because it's designed to stay around this narrow trading range, and you're gonna adjust all the variables around it. But that is the most, and I think the reason why it's the most successful right now, Dylan posted about that. He's like, hey, look at that, like 2.5 billion, 2.6 billion offering, upsize from 500 million. The regular monthly paying dividend is the most successful one here in the United States. Why? It's because people can put a price on it. They can put a price, and they can put a certainty on it, and they can put a percentage on the yield. Like it's not, they're not guessing. They're not sitting here trying to calculate long duration tail, like calculate out in the tail. How many percentages am I getting? What if this thing goes way high or it goes way down? Like, they don't need to think about that. All they need, and then the dividends are paid quarterly. So for us, like more who are in the weeds of this Bitcoin trade, like, Strike, like makes sense to us. Like, but to the general public, I don't think it does yet, or it's going to take some time. But you give them something like Stretch, that's basically competing with the money markets of the Fidelity and SPAXX and money market funds. Like it's instantly, easily quantifiable. And oh yeah, I get paid, $5 5% a year on my Fidelity cash that I keep in my trading. Even when I sell cash equal puts on it, the collateral sits there and pays me and gets paid the interest. Well, now, I can buy this thing for $100 and it stays at $100 and it makes like 10% or 9% a year at 100 face value. I can easily quantify that. I can easily relate to that instrument, and it's not volatile. So the demand for non-volatile stuff is still there. I'm guessing that in Japan it would be the same thing. Asian people, we love stability, but it's going to be there is a reason, I think, to the release of the release order of the prefers, like you said. This is why we'll see in the next slide that Class A and Class B are being discussed first. Like they're not discussing like a stretch for Japan as the first one to come out, right? And the dividend that was said, maximum of 6%, is also it's not that high. So meaning that there's actually a lot more torque because the credit spread is like much tighter. So yeah. Anyways, I kind of got lost here in my thoughts.
Oh, you're good.
I think Shinpei Sensei is like watching this presentation. So if you're watching, arigatou gozaimasu. Domo arigatou. Yeah, cool. I didn't think that he'd be watching. This is really cool. Very humbling. Yeah. Wow. That's crazy. Okay. We discussed that on top right. I'm not going to go over it again. But Class A, basically, non-convertible preferred stock would be the Strife STRF equivalent, and then Class B with a convertible clause in it would be the Strike equivalent. So these are incoincidentally enough, I think those are the two being discussed here. And again, it's not stretch being discussed. It's not a monthly payout with a stable price throughout the year. So there's a reason for it. I think saving the best for last, and kind of dipping the toes in with these long duration the tail ones. Because these, if you release, I think if you release the stretch after these two, and stretch gets priced, by the public, these two could and then they would wait. They have these other two instruments that I didn't know. Oh, what's this company, Metaplanet? Oh, I can get like a convertible clause on my on this preferred share on the common. Oh, hell yeah, I'm gonna YOLO in. Like maybe like it kind of like a gateway, right? I would think gateway drug almost a stretch.
Exactly.
Okay, yeah. Quick, did you have something you wanted to say about the 3.76 billion here out of the 555 billion yen discussed? Because I forgot what.
I honestly, I can't remember, but yeah, so yeah, 555 billion yen between these two products is 300 or sorry, $3.76 billion, I guess, right now. And yeah, right now that's almost twice the current
Right.
net asset value of all their holdings. So
Right.
that much money will eventually be raised, almost twice their current net asset value, in a method that doesn't involve selling common shares. They'll still sell common shares, but we've actually seen strategy pivot to, I think, where the majority of what they'll be doing now is preferred shares. And I think that the inflows can be there. You can't make the math work perfectly, because once you achieve your ratios, then you need Bitcoin price to go up to increase your NAV so that the ratios drop so that you can sell more preferreds, or you have to sell common shares to increase your net asset value outside of raising through preferreds. So there's a little bit of complexity that comes once sort of the initial saturation is reached, to sort of make sure that all your buckets grow at the same pace to keep the ratios right. But initially, it's just about IPOing and raising the money at a set price. And we've seen, like with the stretch product, even though it's going to be par of $100, they decided to raise money at $90, because then people like me and you jumped in it before me at a better price. But we end up buying some stretch because we're not only looking maybe for the monthly payout, but we're also looking for that arbitrage to be closed, which is kind of like a free 10%, but it's all pure inflows for the company. And they expect to make a lot more than 10%, on it once they turn it into Bitcoin. So it's worth it for everyone, and it's this huge incentive for inflows. And I think they're saving that product for later, when they have a much higher net asset value as well. The market will be used to it. They'll price it better. They'll trust it better. And I think it's going to go really, really crazy whenever they IPO that stretch product.
Exactly. I totally agree there. Oh, I remember what I wanted to talk about, the 3.76 billion. So the shelf registration is for 3.76 billion, right? It doesn't mean that they're gonna, right out the gates, like sell $4 billion worth of prefers. Obviously, you have to grow into that's again, that's your sandbox. You have to grow into it, right? But let's just reverse engineer this a bit. So if you say that 3.76 billion is going to be your total offerings, and you want it to be collateralized at a minimum of a 4x BTC rating, so it would mean that your NAV, your Bitcoin NAV would sit around $15 billion, just that, right? Just $15 billion. For
That's
reference,
cool.
yeah, right. For reference, today we are at what, $2 billion, maybe a little bit under, because Bitcoin is like puking right now. But like that tells you that projected NAV, if you grow into that shelf registration, is at 7 times what the current BTC NAV is, right? So just food for thought. That's all.
Love it.
Okay. All right. Well, let's let you take it away on this. Go ahead, man.
Yeah, a few pretty quick slides here that are just these charts that we've shared in the past, but is just a zoomed out. And this is actually not even zoomed out that bad. This is just zoomed out to February, basically when they started the 210 million plan, which is the closest thing to the current plan, the 555. So we have a couple of new contenders. DJT joined with, I think they bought $2 billion worth of Bitcoin pretty much. So they have slightly more than Metaplanet. They have like 18,000 something, I think. XXI bought a little bit more, but I don't know if it's really fair to say that. I think they just kind of shifted it to the company or whatever. Tether and Friends, I guess. But BSTR also entered, and I can't remember how much they have, but maybe
I think
around
30,000 or something
okay.
like that. Yeah.
Perfect. So yeah, we moved down the rankings a little bit because of some of the big money that's come in from a couple of fatter companies. But the main thing with these slides is just to show the growth rate, and that there's bursts where these where we slope up really high for a short time and climb up really quick, and then there's more horizontal periods and more vertical periods, and it just goes back and forth. But you zoom out, and everything is really clean. I mean, find another company that has growth like this. Like, I can't. And we've been saying this since like late April or early May or something. Like, and it's still true, even though the time since we've been in is the majority of this graph, and it's still just this clean line, right? So it's amazing that they've been able to do this and that it's worked out like this. Let's see the next slide. So I think we're seventh now. We were fifth, right? And I think we're seventh.
Yeah, that's right. 7th. I keep track of that because of the memes, man. We gotta get ready with the memes.
That's right. Yeah, we have more doors to break down now. That works. Okay, so this is Metaplanet's Bitcoin per share. The y-axis is log base, and this goes all the way back to when they started with Bitcoin late April of last year. So what, 15 months ago or so? And they've been averaging doubling their Bitcoin per share every 77 days, which again is really, really crazy. So whatever your Bitcoin per share is, 77 days later, it's doubled. And there is that awkward period I talked about near the beginning, and that's why I started some of the other graphs sort of in October of last year, because of the timing of the rights issues versus like when they raised the money, when the money came in, and then when they bought the Bitcoin. It sort of shifts things in a weird way, and it's just starting in October provides sort of a better looking chart, only cutting out like the first 6 months there. But yeah, the growth has stayed crazy stable. Obviously, as I've said before, as you've said before, it will slow at some point. All companies have to slow at some point. There's only 21 million Bitcoin. But yeah, it's amazing just how good the growth is. whether comparing it their own internal metrics like this, they started with like 98 Bitcoin last April, and now they have almost 200 times that. And I think that they only have like 4 or 5 times the share count, maybe. I could be wrong, but it's probably something like 5 times the share count or 6 times the share count, and like 200 times the Bitcoin. Hope I'm not way off on that, but either way, it's very, very skewed towards like way more Bitcoin and a much, much lower multiple of shares, and that's what it's all about. And yeah, that doubling of Bitcoin is since the beginning has averaged about every 61 days, I think. And then here's just a zoomed in version log chart of Metaplanet versus MicroStrategy. This isn't me saying that I think we'll hit 100% ever. Do I think it's possible? Sure. Like everything has a probability. 1% isn't 0%. It's very, very different. When the payoff is insane, but I don't need that. I don't need that win for this thesis to work. We have less than 3% of the Bitcoin of MicroStrategy. And right now, mNAV compressed like crazy to not that much higher than MicroStrategy. And MicroStrategy is probably 1.8, maybe 1.7, and something like that. Metaplanet's around a 2.5, which historically has been near the low. But either way, the company's going to keep doing what they do. I expect inflows to continue, waxing and waning. But overall, Metaplanet is a company that I had barely heard about last year. I knew very, very little. I knew Dylan hired on. I didn't know who Simon was until late April, early May. And now I can't get enough. And now there's, we're producing content. Adam Livingston, other people are producing content. There's so many people in the Discord that are doing, longer form, really thoughtful posts on X. And there's a lot of people with good questions that are making us think differently about stuff. But zooming out, and you don't have to zoom out very far, but the growth is just very, very clean. So, I expect it to continue, and we'll just kind of see what rate it continues at. But either way, the mNAV is 2.5. So there's like 150%, let's call it premium, 150, 160% premium on the stock. So what we need is a future 150 to 160% yield in Bitcoin per share in order to make it outperform Bitcoin, even if mNAV eventually compresses to 1. And I expect us to still be able to something like 10x or even more eventually. But in the sort of, let's just call it 1 to 2 year period, 5 to 10x the Bitcoin per share. And that's with a decent amount of slowing baked in, right? That is going to way overshoot the amount that we need to pay for the current premium that's on the stock right now. So yeah, that's my perspective on that. That's not saying that mNAV is guaranteed for all these companies to slide towards 1, but I do think that mNAV compression in the long term, as the companies get much larger, is to be expected. Mm-hmm. People that disagree, that's fine. That's icing on the cake, and if I'm still a holder, I'll benefit too. But that is the handicap that I put on these investments to make sure that the future potential yield will exceed the current premium on the stock, essentially. And that is definitely the case for me right now. It's much, much exceeded. I actually can't imagine them only providing that much yield, in the next year or 2 or 3 or 4 or whatever. The case for that would be really, really strange.
Just before we close out here, I just want to go back to this slide here. And I know we've been having a slow period, like for the last, month and a half. And, by the way that some people like have voiced their concerns, you would think that we're slowing down. Oh my God, like this line would be like trending down, but it's obviously this is a log chart, but we're still accreting at a decent pace, right? At a decent pace. And, if you accrete above at a 3 mNAV, 2 mNAV, you're still accreting at a decent pace. It's just that right now it is a slower period of accretion. You're not selling as hard, but the graphs are still there. Like there's, you're going to be updating these like as often as you can. And, the trend is still there. Like let's go back to this one too. Like, still BTC we're still on track for doubling every 77 days, right?
Exactly.
So, all right. I think we've reached the end of the presentation. Unless you had something else to say. Thanks for these closing thoughts. I have the same. Like the same thing. One thing I do want to mention is that if you are in the audience, if you have any idea, if we're toying with the idea of like bringing some special guests once in a while. So if you have any suggestions as to who you may want to see interact with us here on air, even if it's just for part of the show, let us know in the comments, let us know in Discord, let us know on X, and we'll you know try and get in touch with those people. We'll see what we can do. Thank you for the good feedback. We enjoy this. Otherwise, we wouldn't be doing here. We enjoyed this. It was overdue. We'll probably see you all at in a couple weeks after their earnings. I'm sure there's going to be a lot to talk about. And then if you want, yes, if you want to advertise Metaplanet, if any of you can get Sydney Sweeney in here, do that. That would be a good promotion for that. But no, it's been a pleasure. It's been fun, and I'm fully ported. Just waiting it out, and just if you're worried about the stock moving up and down, go out, touch grass, go for a bike ride. Go to the gym, lift. Hermes, looking forward to $20 a share soon. Yes, Hermes, continue with your 10 Delta 30 DTE MSCR covered calls, man. Undefeated. I'm a bit more aggressive with my calls, but oh yeah. Also, we're trying to get Simon and Dylan to say tranche more. We have a tranche counter. We have a tranche counter algorithm going on X that scans the X accounts and says counts tallies up how many times these accounts are saying tranche. So we got Dylan to say it 3 times. Simon said it once. If you want to see more tranching, let us know in the comments. Let him know in their comments too. Thank you, Christoph, for tranching. Keep tranching. Touch grass. Be safe. Don't panic. And I hope I hope that everybody has a great evening, great week. We'll see you soon. Good climb.
Good night. See you guys later.